Hello, welcome to today's awesome and wonderful meeting. Today's class is going to be short and exciting, talking about a very important topic, something that gives a lot of money that will also enhance your profitability in the forex market. Now, the truth is, so many persons have been using this particular stuff, making it their strategies and the rest, and further enough, it isn't working for them. Now, what's the way? How can you use it, and what are you going to do for you to work for you? So it's going to be something very interesting. So before I go ahead, if today is your first time coming to this channel or visiting this channel, do well to subscribe, like and share this video. Like and share this video in order to get much more videos whenever we send them or upload them on this same channel. So today we're going to be talking about the moving averages. Moving averages. Now, if you know me very well, I'm not a fan of indicators. Though moving average is a technical indicator in the forex market, but I'm not a fan of indicators. But this is what I do. If at all you are to use indicators, I'm going to show you, I show you how best to use it so that it will work very well for you and work fine for you, so that you make judicious use of it and make profit out of it. So this is a technical indicator in the forex market. Now, I'm going to show you how they use it, people use it, and I'm still going to show you how best you can use it to make much more profit in the market, if at all you want to use it. As a matter of fact, this is one of the best indicators I can assure you, and personally I also use this. One of the best indicators. If you know how to use it, you will definitely make a whole lot of profit in the market. Now, there are different types of moving averages in the forex market. There are different types of moving averages in the forex market. We have the simple moving average, we have the exponential moving averages, we have this, there are a whole lot of them. But the truth is this is what I want you to know. The moving averages, they are all the same. The difference could be in the base and the rest, and depending on the type of trader you have. Like, the difference between the simple moving average from the exponential moving average is that the simple moving average is faster, the exponential moving average rather is faster than the simple moving average, and the exponential moving average is used by short-term traders, while the simple moving average is used by long-term traders in the market. So they are almost the same, they are all the same. Now, this same moving average, they are all made up of periods. If you stay close to traders, you hear them talking about, I'm using period 12, I'm using period 21, I'm using period 30, I'm using period 50, I'm using period that, I'm using period this. Now, they are all the same in the market. They are all the same in the market. Depending on the type of trader you have, you use the different periods for different purposes in the market. You use the different periods for different purposes in the market. You don't just go to the market, choose the different period. Don't say, I want to use period 100, I want to use period 20, I want to use period 21. Depending on what you want to use it for in the market. And it depends on the chart, because period has to do with the chart you are using and candlesticks. Now, it also has a close and the open in the market. The moving averages also have a close and open in the market, but personally I like using the open. So why do we make use of the close rather? So why do we make use of these moving averages? Functions of moving averages. The crosses can be used for entry in the market. Now, this is one of the common ways people use it in the market. Especially those of them. But this particular strategy is not sustainable at all. This particular strategy isn't sustainable. I do not advise it, but I'm still going to show you if you really want to use it. Now, there are many ways to use moving average. Number one, do not use moving average when it is against the trend. Do not use moving averages when it is against the trend. So only use moving averages when it is in the direction of the trend, as seen on the slide here. Only use moving averages when it is in the direction of the trend. Always wait for candlestick confirmation before showing you whatsoever on the chart. I'm gonna you have to put all these things into into consideration. Only use moving averages when it is in the direction of the trend. Always wait for candlestick confirmation. So that market has been buying. If you wish to use moving averages on it, the moving averages must be in correlation of the uptrending market. So market must not be in an uptrend and you are thinking of shorting the market. A market must not be in a downtrend and you're thinking of going long for the market or going bullish for the market. It must always be in correlation with the chart. It must always be in correlation with the trend. And the higher the time frame, the better for it. And also remember, you must wait for candlestick confirmation in whatever you do, as seen on the slide here. Always wait for candlestick confirmation before you go long or go short for a particular chart or for particular candlestick. So let's go to the chart. So the first thing we have on our slide here is that the crosses can be used for entry in the market. You can use the crosses to take entry in the market. So what do I mean by that? Now, this is what we are trying to talk about. Now, for the crosses, I like using two moving averages. I like using the 12 and 26, period 12 and 26, where 12 is the simple moving average and the 26 is the exponential moving averages. So this is what I'm trying to talk about. You go to trend. First of all, I'll have to remove this one on the chart. I have to remove this one on the chart. So remember, moving average is a technical indicator in the market. So I go to the trend, moving average. So 26 is already here. So 26 is already here. Then I go back again. Then I go looking for another one, moving average. 12. I go looking for 12. So 12. I okay it. First of all, I have to change the colors. Remember, you go back, you change the colors. Now 12, I told you 12 should be simple. 12 should be simple. Then I change the colors to make it different from the way it used to be. So red, yes. Let's check for the moving average 26. If it's okay, it's exponential. So this is what I'm trying to talk about. So you can either use the crosses in the market for your entry. So this is what I'm trying to talk about. Whenever you see the moving averages crossing each other, facing up, it's trying to tell you, oh, this market will buy, this market will buy, this market will buy. Something like that. But it must be in favor of the trend. Not that the market is in an uptrend and moving averages are crossing downward, you enter for a sell, no. But it must be in favor of the uptrend. Now, this is what I'm trying to say. And you must always wait for candlestick confirmation. You must always look out for candlestick confirmation before entering the market, either for a buy or for a sell. Now, wherever this moving average is crosses, you can see here the red one crossed the black one, or the black one crossed the red one, facing downward. You can see the two moving averages moving separately or moving apart. But what happened here? Here, the two moving averages crossed each other. They crossed each other, just like what you see here. This one went a different side. This other one went a different side. So facing them, you can see. And what happened at the end? The market is sold. But this is what I want you to notice. The market is in a downtrend. And after the crosses, or after the cross, there was a candlestick, bearish candlestick confirmation here, confirming for a sell. So let's still check for other ones. Now look at this. The red one crossed the black one. Or you can say the 12 or the 26 crossed the 12. And what happened? You can see a candlestick confirmation here. At the end of the day, the market bought. Do not use it in a ranging market, especially for the if you want to get the crosses. Do not use it in a ranging market. Use it in a ranging market, you're gonna lose a whole lot of money. So use it exclusively in a trending market. Exclusively in the, so it must be in an uptrend before you think, not in a ranging market. If at all you want to use the crosses, you can see over here the market crossed the 12 period moving average, the 26 period moving average crossed the 12, and at the end of the day it gave a confirmation, a bullish confirmation, and the market bought hell. The market bought hell. So just look out for trending market. Oh my goodness, look at this cross. You can see the red one crossed the black one, or the black one crossed the red one, and they gave a confirmation in the market. So try it out, but it must be in favor of the trend. Just look at this one crossed this other one, and it gave a confirmation, a bullish confirmation of a buy, and you see it working. So try it out, you will see yourself, you see it definitely working for you, but it must be in favor of the trend, giving you confirmation for a buy or for a sell. It must be in favor of the trend, giving confirmation for a buy or for a sell. You don't just take entry in the market, I want to buy, I want to sell. No, it must be in favor of the trend, giving you confirmation for either a buy or for a sell. Candlestick chart pattern is ahead of the indicators in the market. Then secondly, we have on the slide, can be used to know momentum in the market. This can be used to know momentum in the market. Now when the two moving averages crosses, not in a ranging market but in a trending market, when the two moving averages crosses, then becomes wide, it shows that there is momentum towards that direction. Like this cross here, this bullish move here, and there was a cross, and the two moving averages went aside. Not that they crossed and came together, but they crossed each other, shifted, created a space, not like the one that crossed and was like tight. Let me show you what I'm trying to talk about. If you look at this particular crosses here, the cross, after the cross, the red and the black moving averages were still together. The red and the black moving averages were still together here. But if you watch here, when they crossed here, they were separated. The red and the black moving averages were separated. So when you see that, it shows momentum. Remember, it must be in favor of the trend. Number 3, can be used to know the strong support and resistance zones. Can be used to know strong support and resistance zones. So what am I trying to talk about? Now, to know strong support and resistance zones, all I'm going to do is to remove this moving average, this 12 and 26. Watch me. I delete this 12 and 26, delete indicators. So what do? I go to indicator list, I go to trend, my trend, go to moving average. Now to know your strong support and resistance, you will use a moving average of period 200. To know your strong support and resistance zones, you use a moving average of period 200, and it should be a simple moving average, especially as a day trader. So look at what it looks like on the chart. This is how it looks like on the chart. You can see whenever market gets close to it or tries to get close to it, market always respects 200 period moving average. Markets always respect 200 period moving average. Just like what you see here, market always respects 200 period moving average. Market will always respect the 200 period. You can see whenever market tries to get to 200 period moving average, it will always respect it. Just take a good look at this. Look at market try to break the 200 period moving average. No way. So 200 period moving average is a strong zone. Just look at this. No way. Just look at this. No way. When they try getting here, market is finding it difficult to break the 200 period moving average. Market finds it difficult to break 200 period moving average, just like what you see here when market got here. So if you are buying or selling, probably you are not using any other tool, or you are finding it difficult, and market is getting to your 200 period moving average. As a day trader, do well to take your profit, especially as a day trader, because 200 period moving average, no doubt, is a strong support and resistance zone. is a very strong, very strong. If most persons ask me, oh, what do I advise when it comes to period and moving averages, where do they use it? If you want an advice, the shortest way, use your 200 period moving average. Period 200 period moving average. If you watch my charts, you always see 200 period moving average moving around my chart, because I use it for strong support and resistance. Yes, I do not advise using indicators in the market, but if you use it, if you use the 200 period moving average to get your strong support and resistance, oh my goodness. I do not emphasize on things much, but for me to emphasize on this, that means it's very, very important. So moving averages can also help you to know trend reversals, though it's not on the slide here, but you can write it down. Moving averages can help you to know trend reversals in the market. How do you know when trend has reversed? How do you know that the market is in an uptrend or downtrend? Yes, I taught us how to note the trend of the market, whether going upward trend or downward trend. But market is making lows, highs, higher lows, higher highs, higher lows, higher highs. For a downtrending market, market must be making a high, a low, a lower high, a lower low, a lower high, a lower low, a lower high. But if you get to a situation or get to a point you are finding it difficult, or it's very difficult for you to spot an uptrending market or downtrending market. Have you ever gotten to a situation you don't know, oh, this, you keep asking yourself, is this market an uptrending market or is this market a downtrending market? The easiest way for you, the easiest, I'm going to give you the shortcut. Bring out your 200 period moving average. If the market is above the 200 period moving average, it's still an uptrending market. If the market is below 200 period moving average, it's a downtrending market. If the market is in an uptrend, it's an uptrending market, is above the 200 period moving average, it's an uptrending market. And if the market is below the 200 period moving average, it's a downtrending market. So from what I just explained, look at the 200 period moving average moving below this chart here, moving up below the prevalent market price. So you don't need a prophet to tell you that this market is an uptrending market. Look at it. For the market, or for the chart to be above 200 period moving average, it shows that the chart is an uptrending market. And when it is below the 200 period moving average, it's trying to tell you that it's a downtrending market. So it's as simple as that. It's very short as that. So one of the ways to know that the market has reversed, if this market comes back breaking the 200 period moving average, just like this, maybe breaking the 200 period moving average down, you will know that the market has reversed. And if it comes back to breaking the 200 period moving average for a buy, you know that the market has reversed. But provided it has not broken the 200 period moving average and is still above the 200 period moving average, is an uptrending market. But if it breaks the 200 period moving average down to the downside, it's a downtrending. It's the direction of the market. It has now moved from the uptrend to the downtrend. But if it has not broken it, still up, it's still an uptrending market. And if a downtrending market has been trending downward, breaks the 200 period moving average up, it's now an uptrending market. So it helps us to know trend reversal in the forex market. Can be used to set stop losses. Can be used to set stop losses. Can be used to set stop losses in the market. It can be used to set stop loss in the market. You can use your 200 period moving average. Since I now tell you that 200 period moving average is a strong support and resistance zone, so you now know where to put your stop loss or your take profit. Better still, I forgot to tell you, 200 period moving average can be used to know the trend of the market. A strong trending market, a heavy trending market, and a weak trending market. A strong trending market, a heavy trending market, and a weak trending market. And we explain more on setting your stop loss when as I'm talking about the strong, heavy, and weak trending market. Then I talk on the setting your stop loss. I promise I'm not going to stay long. So remember setting your strong trending market. What is a strong trending market? A strong trending market is a market that does not do a deep retracement. that does not do a deep retracement. Some type of market, when you see some type of, you can't call this a strong trending market because it's definitely making a deep retracement. But some type of market, when you see some types of market, you can't call this a strong trending market because it's making a deep retracement. But some types of market, when you see a market making a steep move, that is, it will move up, not doing a retracement, it just wants something like a flag. Let's see if we can see it. A market that is trending in a strong manner, a strong trending market, does not do a deep retracement. A deep retracement. Okay. Now look at this type of market. Look at this type of market right now. When you see this type of market not making a deep retracement, it will just buy, consolidate, buy, consolidate, buy. It is a strong trending market, and that type of market we always respect the 20 period moving average, just like you see on the chart. Every strong trending market respects 20 period moving average. It will just come, bounce on it, it will not break it, give a confirmation for a buy, come back, bounce on it, it will not break it, give a confirmation for a buy, bounce on it, it will not break it, give a confirmation for a buy, just like this, bounce on it, give a this type of market now is not doing a deep retracement, just like your market buying retrace. No, it doesn't do a deep retracement, just like what you find here. It will come back, bounce on it, give it. You can see this candlestick confirmation, you can see this candlestick confirmation here, you can see this candlestick confirmation, you can also see this candlestick confirmation here. So it will come back, bounce on it, give a bounce on it. It will always respect 20 period moving average. So every strong trending market respects 20 period moving average. So the question now is, if you are using your 20 period, so the same thing your trend line does is still the same thing your moving average will do if you understand how to use it. Now, since you now see that the 20 period moving average or market is respecting 20 period moving average, it's automatically a strong trending market. There are ways to trend strong trending markets which can be used through breakouts, but the easiest way is to use your 20 period moving average. Any market that respects 20 period moving average is a strong trending market. Any market that respects the 20 period moving average is a strong trending market. You don't have to negotiate, or you don't have to bother too much. Allow market to come to the trend to the moving average, which is serving as your trend line right now, giving you bullish confirmation. Then you enter for a buy. Then where will you now set your stop loss? Below the moving average. That is where setting your stop loss is. Set your stop loss below the moving average in such a way that if market gets there, that shows a trend reversal in the market. So I also say something, it can help you to know your healthy trending market. What is your healthy trending market? A healthy trending market is a market that obeys the 50 period moving average. A healthy trending market is a market that obeys a 50 period moving average. So something like this, 50 period moving average. So any market that respects the 50 period moving average is a healthy trending market. And you can use it as your trend line, and it works perfectly well. You can use it as your trend line. So the same function of trend line, if you understand moving averages, you will see it. Now look at what is happening. Market getting here, could not take off these highs, retrace to this moving average, could not take it off. You can see it. Coming back to the 50, could not take it up. Back to the 50, could not take it up. So what is it trying to tell you? So in the future, whenever market comes back to the 50, you can capitalize on it because market has been respecting 50, 50, 50. A healthy trending market is a market that does a retracement, especially a deep retracement in the market. So you see it working, boom, 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 boom. So when it comes back to this particular place, what do? You wait for confirmation for a sell. Since it has been respecting it, just like your trend line. Let me draw the trend line. So this is where moving averages meet the trend line. So the same function of your trend line, if you know how to use the moving average, you will also know the trend line. If you know how to use the moving averages, or if you know how to use trend line and moving average, you can see them working hand in hand. So the same function of the moving average or the same function of the trend line, You can also see that using the moving average. So that is it. You see it working for you, working for you, working for you, working for you. So market will always respect the 50 period, especially a strong trending market. Especially a strong trending market, you can see the market respecting it, respecting it, respecting it. So all you have to do is to put your 50 period moving average, provided it's a strong, a heavy trending market, allow it, market will continue to respect it. So whenever market comes back to it, if it's a downtrending market, giving you a confirmation for itself, then you short the market. It's as simple as that. And the weak trending market is to use your 200 period moving average, which you also use to know your strong support and resistance, but to use your weak trending market, something like this. 200 period moving average is to get your weak trending market. 200 period moving average, you can see it in H1. So any market respecting the 200 period moving average is a weak trending market. You can see this, respecting it. It's a market that does a very deep retracement, not just a deep retracement, but a very deep retracement, just like this, coming back, could not break it. Look at this, coming back. Any market that respects 200 period moving average that is trending, but doing a very deep retracement is a weak trending market. So as a form of recap, because I promised us that I'm not going to take our time, our topic today is moving averages. We talk about many functions. The crosses can be used for entry in the market, can be used to know momentum in the market, can be used to know strong support and resistance in the zones. Remember, I also added, because I didn't put it on the slide, remember I said you can use your moving averages to get your trend reversal in the market. Remember I said that can be used to set your stop loss, can be used to know your strong support and resistance zones. Strong, healthy and weak trending market. I also talked about different types of moving averages: simple moving averages, exponential moving averages, smoothed moving averages, linear moving averages. I talked about a whole lot of things. I also gave conditions to use it very well. Only use moving averages when it is in the direction of the trend. Especially when you are using the crosses, always wait for candlestick confirmation. Remember, I said for the crosses, do not use it in a ranging market. You can use your moving average for so many things to know your strong, weak, and healthy trending market. Are you enjoying the class? Do well to subscribe, share to your friends, so that they will also learn about trading. Do well to learn and learn. So stay tuned for the next video too that is going to come up. Thank you very much. Love you. So listen to the video or to the clip over and over again to learn more. If you have questions, do well to chat us up, or you follow the description. If you don't have your trading account, follow the description below to create one for yourself, your live trading account. If you need assistance, you can also contact us again and again. Thank you very much.